Can you count the stars in the sky or the grains of sand on a seashore? Neither can we count the people, families, and businesses who have taken control of their financial future by joining the Bank and Yourself revolution. But we can tell you a little bit about the type of person who finds that Bank and Yourself works for them. Plus, we can shed some light on why too many Americans have yet to hear about this transformative concept.
Hello, and welcome to the Wealth Wisdom Financial Podcast. We believe when conventional financial thinking doesn't get you where you want to go, you need wealth wisdom. Please hit that subscribe button so you never miss an episode. And if you're watching on YouTube, thank you so much for being here. Please like this video, give us a comment below. If you're listening on whatever podcast platform that you enjoy, we would love to get a rating, review, help this show get to more people.
Now, in case you're just joining our podcast, thanks for listening for the first time. Banking Yourself is a safe wealth building method to achieve lifelong financial security. I mean, that's a lot to say. Safe wealth building method to achieve lifelong financial security. It's a registered trademark created by Pamela Yellen and owned by Hayward Yellen 100 Ltd Partnership. That partnership maintains the official website, bankingyourself.com. Now, this video that we're doing has not been reviewed or approved by Pamela or anyone else at Banking Yourself. What you're about to hear are our authentic thoughts and feelings about what Banking Yourself means to us and how it's impacted some of the people we know.
Now, the one sentence summary of today's episode is this: the history of using whole life insurance to not only protect one's family, but also have liquid available cash to be less dependent on banks and investment firms has a long history in the United States. Today, we're going to tell you some of that history and what it could mean for you today.
Earlier this year, we went to visit the county Amanda that grew up in Ohio, right? So we were going there to visit a family, and we decided, because it's family day, that we would take the scenic route back home. Because, again, we like family adventures and trying new things. So we drove along the Ohio River and we came to a town called Ripley, Ohio. Is that where Ripley's, believe it or not, comes from?
I doubt it.
I don't know. Need to look that up. But I remember, though, that our son's preschool was named after someone from Ripley. So we decided we'd stop and tour the house that this guy lived in. It was called John P. Parker House. Now, John P. Parker, it's a great person to research. Basically, he was a slave and he bought himself out of slavery in the early 1800s and lived right along the Ohio River. He would venture into Kentucky to help other slaves escape and cross the Ohio River into Ohio and into freedom, right? He built a library and a business. I mean, this guy was doing all kinds of stuff. He owned 3 patents and employed both African Americans and European American workers. Anyway, in their library of books, you could also purchase other things. And what we found were replica currency from the 1800s. Like, we literally found money that you could buy.
Yeah, it's replica money. It's not real money, but it's really interesting. I have the ones that are more like regional or from all over the place. One from Nebraska, one from Quincy, I'm guessing, the state of Illinois, Quincy, Illinois. One from the Farmer and Merchants Bank. It doesn't even say the state on here. $1.50, not $1, not $2, $1.50. Here's a $2 bill from Maine, another $1 bill from New York. And this one is from Montgomery County in Pennsylvania, a $1 bill.
I got $1 from the State Bank of Ohio.
All of Brandon's are from Ohio.
Kirtland, Ohio. Apparently another count. I've never been to Kirtland. Another Kirtland. Gallipolis.
Ohio has some really strange sounding cities. This is Gallipolis.
Gallipolis.
Yeah.
I'm not from here. Granville.
A $3 bill.
Yeah, $3 bill. And Ohio Railroad. And then I have some other things that are like little things, little notes from a bar, I believe.
Yeah. So this was, I was reading the history of this one. This guy, it's this one, 25 cents from this tavern owner that he would write these little scripts out, and people that he owed money to, right? It was a debt or a debt that he needed redeemed. You could redeem this from your debt. So you could even take this to the bank, what this tavern owner had written out. Bananas. If you're starting to think this is kind of like cryptocurrency, right? Even some of these banks were only open for a few years before they closed, and the currency that they had issued, their banknotes, were void, right? Like not worthless. As I was trying to research and feel like what happened,
to all these different things.
Right. During the Civil War, the United States needed to raise money to pay for the war, and they issued what's called greenbacks. These are all printed in black ink, so it's green money, and it was printed on green in the back. These don't have backs, at least not the replicas. I don't know if the originals did. The law that allowed them to create the greenbacks, there was something in that law too that made these all heavily taxable, all these different currencies created by these local and regional banks and even individuals. So if you're all into crypto, more power to you, but just know if history does repeat itself,
which it happens to do often.
Yeah, I mean, there's this famous cliche, if those who don't learn from history are doomed to repeat it. If the government goes back and said what worked to get rid of this before, they didn't outlaw this, they just heavily taxed it. Anyway, now part of why this was true is that the US government only was creating coins at that time, and carrying around a bunch of coins was very difficult, right? During the Civil War, they issued these greenbacks, but people would use these banknotes instead of lugging around a bunch of coins. And then the greenbacks went away. It was I think it was like determined unconstitutional, very weird. But then when the Federal Reserve was created in 1913, we got a centralized Federal Reserve note that was authorized, but not created by the US government, that we now call money, these guys. And we had tried a couple other times.
One's real,
that one's real. Yeah. Not counterfeit or replica. We've tried a couple times to create this kind of currency, and every time it's failed. This is the one that's had the longest history, and that whole background is a story we don't have time for today.
So why are we telling you about bank reserve notes? Because you don't have to go very far back in American history to see that money was totally different, even just a couple hundred years ago.
150 years ago, even.
Not that far.
170, something like that, yeah.
And we tend to feel like what we experience now always has been and always will be. And that is not the case. I think that's why the craze for crypto and that whole thing is drawing people, because we kind of know that things are changing. And again, that might happen. But think about how much technology has changed since the early 1800s, and how could money not be different too in 200 years from now?
Right. So there's this financial tool, though, that Americans have been using and depending on since before the Declaration of Independence was signed. The sale of life insurance in the US began in the 1760s. The Presbyterian synods of Philadelphia and New York created a corporation for relief of poor and distressed widows and children of Presbyterian ministers.
That's a lot to say.
Yeah, in 1759. Basically, they created a life insurance pool of money, like a company for their ministers. An Episcopalian priest organized a similar fund in 1769. And then between 1787 and 1837, more than 24 life insurance companies were started throughout then the small US. It was after the Civil War, as some of these changes in the currency were happening and all of that, that many new life insurance companies were started. By 1871, the same year as the Great Chicago Fire, for reference, our Chicago listeners there, hi. 1871, life insurance in force had grown to $2 billion.
Now, inflation calculations only go back to 1913 with the creation of the Federal Reserve note. But can you imagine what $2 billion would be like today? If you add that amount, that's a lot of money. I mean, now it seems like a little less, but $2 billion in today's dollars would be
a whole lot. Yeah. Now, for some context to help put this into perspective, the New York Stock Exchange was also created in the 1700s by 24 stockbrokers.
24, that's it?
That's who started it. Yep. In 1792, about 30 plus years after life insurance was started. And the introduction of technology like the stock ticker in 1867 revolutionized communication, made it possible to quickly transmit market information across the US. When telephones were installed at the New York Stock Exchange in 1878, the market became even more efficient. On December 15th, 1886, trading volume topped 1 million shares for the first time. In this post-Civil War era, the market capitalization was around $6 billion to $8 billion. That's the market cap. $6 billion to $8 billion. I once saw a chart, or as we were researching, I came across this chart that went back to the stock market pre-1900s. A lot of them start around 1913 or so, or maybe 1903, something like that. This one went back to the 1870s and showed that huge expansion of the stock market from 1870 to 1929. And then all the gains were wiped out. Literally, the value of stocks were lower by 1931 than they were in 1871. 60 years worth of growth in the stock market just wiped out entirely.
That's somebody's lifetime.
Yeah.
That's great.
Maybe today.
Yeah.
I don't think they lived that long back then, but yeah.
It's their lifetime for sure.
For sure.
Well, and then I think about, we just talked about history in the West times, imagine the computer and how things have evolved since then. The question is, what happened to the type of life insurance companies who met the criteria for a properly designed bank and yourself type whole life policy? Well, they continued to grow during those 60 years, and they continued to pay dividends during the Great Depression. In fact, there's no record of any life insurance policy losing value during the 1930s and in the 1940s. In the 1940s, it reported 50% of Americans owned whole life insurance at that time. So that's a lot of people. And the companies that we're talking about still exist today.
Yeah.
These are the ones we work with.
We have policies with them. They were still paying dividends during the Great Depression and didn't know, policies lost value.
And I want to go back, that 50% of Americans who own whole life, that's a lot of people. What happened?
Well, so since then, dividend paying whole life insurance policies have continued to support generations of Americans on their financial journeys. They've continued to improve. They've continued to modernize. Life insurance, whole life insurance has been more popular in some decades than in others. I'd say in the 2020s, whole life is gaining in popularity, especially as many believe we're overdue for another major stock market correction.
Yeah, I mean, within the stock market, it's been, realistically saying, oh, up and to the right, but now things are changing, right?
Maybe. We don't know. Nobody has a crystal ball.
Yeah. And who knows, but the building some foundations is really important. Now, whether you believe that or not, here are top 5 characteristics we believe most banking yourself revolutionaries have. These are top 5 things that we see in all of our clients.
Or most of them.
Or a lot of them.
Yeah. So the first one is personal responsibility. Banking yourself revolutionaries know it's their job to create the financial future they want. No one else is going to do it for them. It's right there in the trademark. Bank on yourself.
Yeah, I think that's huge, having personal responsibility. Oftentimes people want to give it to somebody else, but take 100% responsibility for you is key. And that's what I want to do for my clients. Now, the second one is care for family and community. While banking yourself revolutionaries tend to value the cash value of a policy more than the death benefit, I know I do, the death benefit is still important to fulfill any promises they weren't able to keep in their lifetime to their families, to their faith community, and to other causes that they may care about. So that's why life insurance is a bedrock part of the system.
So we got personal responsibility, care for family and community, and then enjoying saving money. Many bank on yourself revolutionaries enjoy saving money, sometimes even more than spending money. They get satisfaction from seeing an ever-growing bucket of money they can use whenever and however they want. They don't have to worry about it going down in value or not being there when they need it. And so it actually increases their enjoyment of putting money there.
And let's be honest, the banking system has decentivized us from saving in savings accounts and wanting us to take more risks. So these people still want to save money and they want to see growth. So what better place than into a properly designed life insurance policy? So enjoying saving money. I like that. Then they value flexibility. A common myth of whole life insurance is that the premiums are low. Well, that's true for some parts of a properly designed banking yourself policy. It's not true for all of it. Even more importantly than flexible premiums, banking yourself revolutionaries tend to value the infinitely flexible use of their cash value for all the things of life as needed. We've talked about that in countless episodes in the past. You can hear our story about that. Now, cash value that they thought would be set aside for their kids' college tuition could also be used to help that kid start a business. Because, sometimes not all kids are college bound. They might be in other places. And so we want to have it for other things like business, or to help them buy real estate, or to help you buy real estate for that matter. Who knows?
So value and flexibility. And then the fifth one that we think is top of the list, there could be way more of these, but the fifth one is preferring certainty. Whether it's certainty about the increases of cash value, the receipt of dividends, or the certainty of how much a policy loan is going to cost. Properly designed bank on yourself type whole life policies are very predictable. That kind of certainty creates a financial foundation that allows policyholders to sleep better at night and worry less about their financial futures.
Yeah, and I think the main thing is thinking with that certainty, they're able to then maybe do things in the crypto world or in the new whatever money world, but they're able to build a solid bedrock to then do those things. Now, we subtitled this episode, Why Haven't I Heard About This Before? Honestly, I hear this all the time. And that's a great question that, again, we hear all the time. And we just told you the long history of life insurance in the United States. And as you can imagine, in the day-to-day, year-to-year lived experience, it's actually kind of boring. It's like really boring.
Yeah, imagine this. Let's say you turn on the news, you open the newspaper, wherever you get your news, you saw this headline, life insurance dividends received as expected. You'd likely move on.
Yeah, no one
cares.
We want to look at ships tanking or something.
Yeah,
stuff like that.
No one shares at the office party or at the community event out networking. Yeah, my life insurance is doing exactly what I wanted it to, man. I'm so proud.
Yeah, it's human nature to look for the most exciting things. And I mean, honestly, the media wants us to be grabbing that kind of stuff.
Addicted.
Yeah. But when it comes to the money part of our lives, the exciting things are also a great way to lose money. Again, looking at the crypto world and some of this stuff, there's a lot of people I hear that, were betting on these kind of things and it changed, right? I don't know, right? So we want to build a good foundation, and that's a reason that sometimes it's not in the news.
Not always the case. Some people take big risks, get big rewards, but not everybody.
Yeah.
Now, so the short answer to that question, why haven't I heard about this before, is because it's boring. In fact, very successful marketing campaigns have preyed on the boringness of whole life insurance to convince people to do the opposite. We covered that in one of our most popular episodes published back in October of 2020. It's called The Origin Story of Buy Term and Invest the Difference. You want to hear that part of US financial history / marketing history, really is what it is. You can check out the link to that episode in the show notes.
Yeah, Dave Ramsey loved that one. So thanks for going on a brief tour of US financial history with us. We focus mostly on the late 1700s through the 1930s. There's a lot more we could share about the time frame after and through today, but the most important thing is that the history of using whole life insurance to not only protect our families, but also have a liquid available cash and be less dependent on banks and investment firms has a long history in the United States. I mean, longer than these dollars, and even this one has been around. Let me show you this dollar. This is a real one. I think.
Well, and that history of whole life insurance continues today in the financial lives of millions of Americans. Just because you don't hear about it on your social media feed doesn't mean it isn't the bedrock of people you know and their financial journeys, helping them take personal responsibility, care for their families and communities, enjoy saving money, keep their money flexible, and give them certainty as they approach life's major milestones.
Now, are you ready to learn and confirm if Banking Yourself is right for you? We invite you to click the link in the show notes where you can get a safe wealth building guide and a free chapter of Rescue Retirement by Pamela Yellen herself, the founder of Banking Yourself. We also have our link to schedule a 15-minute discovery call. So go to wealthwisdomfp.com/call, and we could share a little bit about our experience, how it's worked for us, and how it may work for you. So
more importantly, answer some of your burning questions that we didn't answer in this episode. Schedule that call and we'll talk through them.
So www.wealthwisdomfp.com/call.
Thanks for joining us. Hit that subscribe button and live long and profit. The topics presented in this podcast are for general information only and not for the purposes of providing legal, accounting, or investment advice. We might even have gotten some of the history wrong from our sources, just the best we could find of what the history is. So fact check everything. And on such matters, especially the legal, accounting, and investment stuff, on those matters, consult a professional who knows your specific situation and keep learning more about history but be careful who you learn that history from, because we all know that different people write history in different ways, depending on their perspective.
If you go buy these dollars, it's not going to work at the grocery store, just so you know.
Yeah.
They don't work anymore, but.
Well, these are replicas. They're not even the real thing. If you do want to see the real thing, we've seen it in person in the Cincinnati History Museum. So if you're ever in Cincinnati, you might check that out.